last Tuesday, there was a switching to the contract. That's why we see a gap up here. As long as 6600 didn't get violated, there is a high chance for it to continue the rally. The only bearish bar that we have is on Wednesday, came with slight increase of the volume, but get bought up immediately. Fill the gap and continue to run up. As long as 6600, the immediate support level, is holding up, we should see further up more for the S&P 500 to test 6800 as the first target. I also mentioned in the email sent out on Monday, there isn't any threatening volume pattern yet. We do have some increase locally in terms of the supply, but they all form the demand tail. In terms of the price action, the only two bearish bar that we have will be here. The rest of that normal. Look at the bigger structure. We still have this high low structure with this April bottom. Get back up, breaking out and forming the sloping type trading range, and again breaking out back into this up channel. We have this overbought line that is a middle line and also the demand line. When it try to come in above the demand line, this act as a resistance. It respect this line, this act as a resistance here, and this resistance, and resistance. There's a reaction from this resistance, from reaction 1, reaction 2, reaction 3 is getting better and better each time, and followed by a breakout and going up. Now is going to test 6800. That's a round number. We'll need to see how it reacts. It could still form consolidation testing structure before it run up further. That's quite bullish at the moment. Short term, despite extended, because so far since the breakout, we have a continuation without meaningful pullback. The only meaningful bar that we have is this attempt to go down, but get bought up immediately. Almost like going up every day for 2 weeks. That is bullish. In terms of the volume level, apart from this forming as a demand tail, localized increase of the supply, the rest of the volume is relatively low that come with decreasing of the volume. That could be exhaustion of the demand, but we need to get a confirmation from the price. This is only an indication of lagging of the supply. That's why it will continue to go up until it hit with the increase of the supply like this or like this. This is the first thing that we will need to anticipate for a mean of reversion, especially we are still in September. September could be choppy, and I wouldn't be too surprised if we do get a pullback in the last week, especially after this extended run. That will be also considered as healthy if we do get a pullback consolidation before we will run into the year-end rally from middle of October until Christmas. In terms of both volume and price, so far this is still going up and there's no signs of slowing down yet. The only thing that I'm watching out will be the exhaustion of the volume, exhaustion of the demand, but that will need to get a confirmation of a bearish bar with a spike of the volume to kickstart and pullback. Until then, this is still going up short term, medium term, and also long term.